Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is the 2nd of December. Today we're going to talk about Russia and its impact on the markets. We're going to talk a little bit about Australian fundamentals. We're going to talk about oilseeds and the cattle market a little bit today. We did talk quite a bit about Brazil yesterday and weather in the South American crop. If you want to see that video, because it is still some relevant and good information, we'll put up a card here at the corner that you can click on that video after you're done watching this video, of course. Today, let's talk about what happened in markets. We saw $2.40 of losses in the canola market and that traded down to 644.80. Minneapolis wheat saw 4.75 of gains to 581. Kansas wheat saw 6.25 of gains to 533. Chicago wheat up 6 as well to 541. Again, those three wheat markets were bolstered by the comments that were made by Putin today. Soybeans saw $3.25 in losses to 11.24 and 3/4. Corn was up a nickel to 4.50. Soybean oil was up about a third of a cent at 52.68. Canadian dollar gained 10 points today at 71.54. Live cattle, feeder cattle had a good day today. Live cattle up 428 per hundredweight to 218.48. Feeder cattle up 845 to 323.30. All right, let's get into the comments by Russian President Putin, who kind of stoked a surge in the CBOT corn and wheat futures on concerns that another halt to exports out of the Black Sea could derail the export markets for those grains. These concerns have arisen after Putin spoke about the prospect of war with the European Union, which was because he felt that they were trying to thwart a ceasefire or a deal on the Ukraine war. These comments did come before meeting U.S. envoys in Moscow to discuss a proposed peace plan into the end of the war. I don't think anybody has some really grandeur expectations of a whole lot of progress to be done at that meeting, if that's the right word to use. There has been some escalation in the Black Sea recently. A couple of days ago, Ukraine hit two oil tankers in the Black Sea. With drones. And then what happened just recently was a third Russian attack was done in the Black Sea, this time to a vessel of sunflower oil. So it's not just crude oil that is being affected. There are ag commodities that are being affected in this region. Now, the sunflower oil boat didn't take much damage. There was no loss of life. They didn't even really call for a signal of distress. But I still think it kind of shows the risk that is currently occurring in the Black Sea. And just overall how tensions are getting a little bit worse, even though there is proposed talks to come in. So let's look at the corn chart here. Earlier in the day, in fact, when we put out our morning commentary this morning, corn was actually lower. Most of the markets were lower. You can see now that this day brought the corn up above the 200-day moving average. Of course, we always feel that that's a good thing, a good technical signal. It has done so previously before a big knockdown at the beginning of November. So it's hard to trust a move like this because news and fundamentals can hammer these markets pretty significantly. The next high that we'll be watching for is about 457, which is where those highs in early November reached. So now that we're above the 200-day moving average, I think we should be able to get up to 455, 460 before we hit the next level of resistance here. Let's get into the wheat markets. Now, we did mention that wheat markets were higher on the Black Sea news. Can't really tell by looking at these charts. It's still been relatively flat. Today's gains were higher than we've seen in the last week or so, but still relatively anemic here in the wheat markets. Here's Kansas City. Maybe a little bit more gains here. Touch the 20-day moving average. There's the 100-day moving average there as well. So a little bit of a cluster of moving averages, which does signal that we are in some neutrality in these markets. And of course, Minneapolis wheat was bringing up the rear. Again, is not as affected as much as the winter wheat classes over conflict in the Black Sea. So overall, a good day for grains, a good day for corn because of the Black Sea threats there. If you're not subscribe to this channel, do so already. We're going to get into some some oil seeds and some cattle here in a second. But, tell your friends to subscribe to this channel. And also, we keep getting new subscribers each day to our premium service. We are working hard to bring you the best market analysis in Western Canada for Western Canadian farmers. We really want to thank you for your business. We're very humbled by your interest. And if anybody you know is interested, they can go to canadianagmarkets.com/subscribe to do so. All right, let's get into Australia. This is a bit of a broad brush here because there's a lot of commodities covered here. Wheat production in Australia is forecast to be increased by 4% to 35.6 million tons. As you can see, we are looking at the second largest grain crop that we've seen in Australian history. There's lots of good production and production variables that made this come true. We did see canola production also increase by 13% to 7.2 million tons. Barley increased by 18% to a record 15.7 million tons. Australian pulses also, which affect us here in Western Canada, increased by 16% to 6.3 million tons. Sorghum, which is more of a corn or feed grain, it actually fell by 4% to 2.6 million tons. But that's still way above the 10-year average. And unfortunately, Canada experienced a lot of the same thing: big canola yields, big wheat yields, bigger pulse yields as well. Just to kind of bookend that as well, there is a Statistics Canada report out later this week. In fact, what day is it? The 4th? I think it's the 4th. Should have noted that particularly. There's expectations that canola is going to be well over 20 million tons. Last Statistics Canada report put it already at 20 million tons. Also, spring wheat, I think, is going to go up. The thing is Statistics Canada, we always like it as analysts because it's the only time that we really get to see some fundamentals from Statistics Canada. They don't publish them quite as frequently as they do in the US with the monthly WASD. So this is an exciting time for us nerds, but I think the market has generally priced in a lot of the anticipated gains here. As when the crop was big, farmers were excited about it. They were telling their neighbors, they were telling the grain elevators. There was a push of product into the elevator system, which decreased prices during harvest as well. This is what canola production looks like right now with Statistics Canada's current 20.03 million tons into the system. Their yield is at 41.2. I think it's going to be 42 or better, which might actually be a record, or at least a record in the last few years. So that we could be looking at a large increase in both canola yield and production. But as I said, as the harvest was coming in here, and as the expectations for a big harvest were being priced in through the middle of September, we had lower prices in October. We're kind of coming out of that now. We do know there's some seasonality to canola, particularly once we get into the new year. Supporting canola today to some degree was some of the vegetable oils. We're seeing soybean oil now creep back towards the 53-cent mark, which is where we saw some previous highs. We also see palm oil getting some gains here. Palm oil may have been oversold as well. And we're just seeing a little bit of a rally in these markets, even though they still are somewhat entrenched in downtrending markets as well. Getting right to the heart of soybeans, the market continues to wait for Chinese purchases or further Chinese purchases. Doesn't look like China's going to meet the 12 million ton mark, although I think part of the agreement was that they could also buy futures, which they might be doing and taking delivery of or planning to take delivery of as well. So it's still a bit of a sideways market in soybeans. In fact, it's still a sideways market in canola overall. All right, let's look at feeder cattle cattle in general here today. We've seen basically, 4 or 5 days of a good uptrend here. I think the Trump comments really hammered this market. It started some long liquidation, and those sales. And this pullback may have been a little bit oversold. I think that's being shown now here in the charts. Feeder cattle are back up or just under 330 a hundredweight now, and live are back up above 220. So overall, we've had a good day in cattle. We had a good day in corn and wheat, although that came along with some fears of escalation of the conflict in the Ukraine war. And that about covers it today. Hope you had a great day today, and we'll see you again tomorrow.